Music is the ultimate uniter. It belongs to all of us. This is more than just live music. This is Venu. My name is J.W. Roth, founder, CEO here at Venu. I've always been a music fan first and foremost. I was the kid camping out for Stones tickets and singing along in the pouring rain. It's those moments that inspired me to build a live music company that is fan-founded and fan-owned. As a publicly traded company, Venu is redefining the live entertainment experience, one world-class venue at a time. We build premium music venues designed for the ultimate fan experience, blending luxury ambiance and unforgettable performances. As one of the fastest-growing live entertainment companies in the world, we are disrupting the music industry. Our venues are built for the music lover who craves more comfort, more access, and more rock and roll. And we are just getting started with new venues planned nationwide. Venu is setting the stage for the future of live entertainment. This is music reimagined. This is Venu.
Welcome to Encore Equity, where investors, creators, and visionaries unite to redefine the future of entertainment and highlight Venu's disruptive, fan-driven revolution. Hosted by Venu's now all-star, self-made entrepreneur, founder, chairman, and CEO of Venu Holding Corporation, J.W. Roth. This is our dear friend, Dave Gentry. He is here with us on the show. He is the author of Small Stocks, Big Money, a recognized expert in the small cap space. He is also consulted over 1,000 public companies, founded a financial news shows that broadcast over to 177 million homes, and has appeared on CNBC and Fox Business. So Dave, I just want to give a brief introduction to Dave Gentry. Thank you for being here. I'll let you guys take it away.
Thank you.
Chloe, it's good to be here. Dave, thanks for making the trip out here. I've heard you had a hell of a day getting out here. He's missed 2 planes. Now tell me the whole story. What happened?
I can't do that. It's embarrassing. But let's say I was supposed to be here yesterday. 2:30, and I got in today at 12 o'clock.
I'm just glad you're here.
But it's a pleasure. It's a
I'm
privilege.
glad you're here. Again, thank you for being here today. Dave Gentry, RedChip is here. Before we get started, I'm going to have Dave spend a couple of minutes and kind of walk us through RedChip. Who is RedChip, and why should we be interested in RedChip?
Well, sure. Thank you. So RedChip is an investor relations and media firm with a 32-year history.
Awesome.
So we represent about 70 companies a year, New York Stock Exchange, NASDAQ companies. Market cap's $2 billion and under. In the 90s, we were a research firm, and we were putting coverage on companies like Starbucks in 1992, one of the first, Winnebago, Daktronics. Over the years, in the late 2000s, we evolved into a full-service investor relations and media company. So we have our own show that airs on the Bloomberg Network. It's not a Bloomberg show, but it's called Small Stocks, Big Money, every Saturday, 7 p.m. Eastern, nationwide on Bloomberg. We do research profiles for our companies. We do road shows for our companies. We have a very robust social media platform, a very robust national media platform where we write, produce, create ads for them, talking about the value proposition of their company. And we have a very big network across the country with brokers, RIAs, institutions, and analysts that cover stocks $2 billion and under market cap. So long history, and it's taken me a while to figure this business out, but we're getting there.
You've done it. Well, listen, I love having you here. Let's dive into what we're going to do today. And thanks again for being here. Okay. Dave, also, for you that are viewing today, Dave is runs our IR and oversees a lot of our investor relations. He's about one of the best in the space, and we're just grateful to have you here. So today we're going to do a little sort of, what would you call it? Investor 101, Investor Relations 101, so that you all as shareholders understand the different piece parts of how this all works. And we're going to start with sort of 2 different buckets of investors, right? There's your institutional investor, and then there's your retail investor. Dave is an expert in the area of retail investors. So Dave, just at a very basic high level, walk us through the difference between an institutional investor, what they do, where they're from, and your retail investor.
So an institutional investor would be a firm like BlackRock or even Goldman Sachs and the funds that they run in-house. And they're investing for basically corporations and sometimes very high net worth individuals. So that's the institutional side. They'll take very large positions in stocks, and they represent some of the biggest corporations and some of the biggest companies in the world and some of the richest people in the world. On the other hand, you have the individual investor. This is a retail investor. Included under that heading of retail investor, you also have high net worth investors, and these are people that are worth $1 million or more. But if you include all of them, it's 61% today. 61% of American households have stock accounts.
Wow.
And so they're not all buying individual stocks. They have ETFs, et cetera. And now, today, globally, there are 100 million people with stock applications, and that's growing at 20% a year. So this is a very well-titled show, The Rise of the Individual Investor.
Right. What is I look back and I think to myself as I've come up in the business world and how the buying stock has changed. When I grew up, you had a stockbroker, right? And that stockbroker would call your house or your office, and he would pitch you on a story, tell you a story. And then he would talk to you a little bit about the company, and he would help you make that decision. Today, that's not the way it works typically. The way it works typically today is all of the online trading and the access to the markets. Do you see that that the access now has really driven the retail investor?
Well, it has, and this has been going on for 20 years. During COVID, it exploded, right? You had millions of people at home, particularly the millennials. In fact, the millennials themselves represent one of the biggest retail segments of the retail buying segment. For example, on Robinhood, they have 25.5 million investor accounts. Wow. The average account is worth $8,000.
Wow.
And again, we now have retail investors have, charts, tools that pension funds managers have had for years. They now have it at their fingertips.
Right.
And you have ChatGPT. We just launched a product called RedChat, in which for 4,000 stocks, you can ask any question. If it's in the filings, in the press releases, it'll give you an answer in seconds. So with knowledge, I call it the decentralization of finance.
Yeah.
We see it in crypto, right?
Yeah.
And we see it here with the decentralization of the power that these individual investors have away from the institutions, not using a stockbroker.
Yeah.
Exactly.
Yeah. It's interesting because, if you think back in time, access is everything, right? So access to research, access to inside company sort of thought always came from institutions, your stockbroker. Today, millennials have access and ways of gaining access to information that they didn't have before. So they're making a lot of these decisions on their own.
They are. And they're also, as we've seen with the meme stocks, acting collectively, right? You see it with GameStop, with Bed Bath & Beyond, and totally disrupting the markets and taking on the institutions, right? And cracking these shorts. And you've seen stocks increase well beyond the fundamentals in the valuations they deserve. So a lot of power.
You and I see it. We've seen it in spades the last 2 days. Newsmax came out and went from $1 billion market cap, which is, I think, about where it should be, maybe a little higher than that, to over $20 billion in 48 hours. Music is the ultimate uniter. It belongs to all of us. This is more than just live music. This is Venu. My name is J.W. Roth, founder, CEO here at Venu. I've always been a music fan first and foremost. I was the kid camping out for Stones tickets and singing along in the pouring rain. It's those moments that inspired me to build a live music company that is fan-founded and fan-owned. As a publicly traded company, Venu is redefining the live entertainment experience, one world-class venue at a time. We build premium music venues designed for the ultimate fan experience, blending luxury ambiance and unforgettable performances. As one of the fastest growing live entertainment companies in the world, we are disrupting the music industry. Our venues are built for the music lover who craves more comfort, more access, and more rock and roll. And we are just getting started with new venues planned nationwide. Venu is setting the stage for the future of live entertainment. This is music reimagined. This is Venu. Wild ride. Now, in some ways, can the individual investor find themselves out over their skis in a situation like that?
Well, absolutely. Because the stock went to, what did it go to? Over $240?
$270.
$270.
It opened at $10.
And it's $53 today.
Yeah.
So it looks like the proverbial pump and dump, which you see in microcaps, right?
Yeah.
And I happen to think on this, I could be wrong, I think there was some real orchestration there and some very powerful people involved in moving that up. I could be wrong. I would think, we've seen a couple of years ago in the small cap space, we saw IPO stocks go from 4 to 40 and come back down to 3 or 2 and 50 cents.
Yeah.
And NASDAQ and others discovered it was a lot of foreign money and frankly, Chinese money.
Yeah.
And they put some restraints. So I'm not saying that's what happened here, but you absolutely can get caught and especially if, you're not a sophisticated investor.
Yeah. And that's sort of what I see as the risks for an individual investor. That is why I think you have done so well. I'm going to use RedChip as an example, where you actually provide some insight and some transparency into what you guys think is a reasonable valuation for the companies that you talk about. For example, when you read a research report, and that research report at the end of the day gives you a target of, say, $15 to $18. I'm just making this up. You have a little bit of a crutch as an investor to say, I can rely on this piece of research because the guy writing that research has done a lot of work. It helps an individual investor from getting out over their skis. Maybe like what we saw yesterday, which in that particular case, it's not the banker's fault. It's not the market's fault. It's the investor's fault, I think, a lot of times, because they're the ones driving that price, because somebody has to be buying that stock at valuations that are clearly over even what the company's expectations were.
That's a great point. There is one caveat here, JW, and we see it a lot in the small cap space, and it's called algorithmic trading. And so some very smart guys have programmed to look for certain signals in stocks. And what you see happening is this is quants. They're buying shares, moving the stock up a little bit, maybe 2%, 3%. They're selling shares, but it's a formula that some very, very smart people have put in place. So sometimes we'll see stocks with a 3 million share float trade 100 million shares. Well, What's going on there? Part of it is exactly what you said. It's investors hopping on the bandwagon, not thinking, and hoping, like I've done many times, it's going to go another 25, 50% up and you get stuck and it comes down.
Yeah.
But what's driving a lot of this is the algorithmic trading, right? Yeah. It's totally programmed trading.
Right.
Buy, sell, buy, sell, buy, sell, buy, sell.
Yeah. It's that hamster wheel that can catch you.
Yeah, exactly.
There are a lot of shifts in how the individual investor trades now. What do you think of the platforms like Robinhood, like Webull?
They're very powerful platforms. Look, they're getting information that, again, and tools that before in years past, they were only available to people working at Goldman Sachs and the big banks and the big funds. So they have all the same tools. It's very inexpensive, right? And so that's why, again, you have, just to take an example, Robinhood now has, I told you this earlier, they have 25.5 million people, user accounts on that platform, and it's growing. It's growing at 7-8% a year. So a lot of power. What amazes me is the collective power. And we've seen this through those Reddit chat rooms,
Sure.
right? The platform.
Sure.
So they're, again, able to just go in and move a stock. It's just amazing.
It's incredible. It's incredible. With somebody that's just getting started in the market, what would be the top 3 tips you would give a brand spanking new investor that doesn't have an ounce of history of doing this? What would be your top 3 sort of pieces of advice that you would give a young investor?
I would say 1, read Benjamin Graham's The Intelligent Investor. That would be number 1. Number 2, I would say, take some classes on investing, right? There's good classes at universities. There's great online classes where you can learn from experts. And I'd say 3, look, be very careful with microcap stocks. They're even you're young, it's fine. You can put some of your money in there, but if you're going to buy smaller cap companies, which the younger investors tend to do, they can do that because they've got many, many years to build that investment portfolio. Yep. But buy baskets of stocks. If you're going to buy the smaller microcap stocks, buy a cornucopia of stocks because in the microcap, small cap space, a high percentage don't work out, but there are those that do make it worthwhile. And you see those 10 to 20Xs, like Venu. I think Venu is going to be a 10X play, for example, right?
I agree.
And,
totally agree.
Yeah.
Fundamentals.
And get the fundamentals.
Warren Buffett, I've been a study of his, and I love so many of the things that he says. But he always talks about people get confused when they're buying stocks. They need to really think about the fact that they're buying businesses, right? They're buying a business to understand that business. And he always says, when stocks go down, it maybe gives you the opportunity to buy that business cheaper. And if you already made the decision that you like that business, that you believe in that business, and that you're in that business for the long haul, sometimes looking at a stock gets you a little bit off balance or a little bit unbalanced, right? Because you're not looking at it as you're buying a business. So anyway, I find that very interesting. So I think young investors, and I do it myself. I sometimes catch myself buying a stock because of a story, versus buying a stock because of the business. And I really believe that investors will do themselves much better by understanding the business behind the stock, and looking at the stock as a business.
Well, that's such a great point. I mean, you've got to understand the business model, right?
Yep.
And when we talk to institutional investors and they look at investor decks, they say, look, one of the first things I want to see in the investor deck is how do they make money, right? How do they make money?
Totally.
In the small cap space, they're looking first at the jockey because it's management. They're looking at the CEO.
Totally.
And so, again, I'm not here on your own show to talk about Venu, but I should. I'm in your office. I represent you. Yeah. If you look at your background and your history, it's quite amazing. I
appreciate it.
And we have investors, we have funds, family offices that are putting $2 million-3 million into your stock, and they're doing they love the business model. Yep. But they see what you've done in your career, and and I'm here in your office today. It's just amazing walking around and seeing everything. But I
appreciate it, and I've always been the same way too. At the track, the jockey is really a big piece of where you're placing your bet. Good people can fix bad deals just about as fast as bad people can screw up good deals. And so it's persistence, and it's all the things that you want in your jockey is important, is an important piece of your decision-making piece. Okay, I've got a couple more things I want to talk about. Are there mistakes that you find the retail investor makes at a at a faster pace than your institutional investor?
Well, that's a great question because we also see institutional investors make big mistakes, don't we? Right? We see them get behind companies. There was an article today, I think it was in the Journal, on the carbon credit company that some pretty big investors had put hundreds of millions into, and they're going bankrupt, 170 million in debt. And there were some pretty good institutional investors behind it, so they make mistakes too because. There's no, none of us have a crystal ball. We're all going to make mistakes. But are there mistakes that, and again, in my book, you'll see that I've interviewed both individual, very high net worth investors, made a lot of money on small caps, but also fund managers that have a very strict formula that they followed for years. With different criteria, and even they make mistakes. So do they make mistakes at a faster rate? Well, that depends on the individual investor. Ostensibly, again, the institutions are more sophisticated. They have more expertise. They have a bigger brain trust. But it's a tough question. I can tell you personally, I've made a lot of mistakes investing over the years. I've lost a lot of money.
I've made a lot of money, though, learning from my mistakes.
Yeah. Right.
You know what I mean?
Right.
I've sat in a saddle for 60 years, so and you have too. So we know how that works. How do you see new technology? I'm going to talk AI and all of these new sort of pieces that are coming. How is that going to affect the individual retail investor?
Well, I think we're seeing it happening, right? Again, they can get even on our platform, RedChat, on 4,000 small cap stocks, you can get answers in seconds on any company.
Right.
And so, and with ChatGPT, quite powerful. We've already talked about the algorithmic trading, which is trading the dynamics of how a stock trades today, right?
Yeah.
Almost it's artificial. It's not a fund manager saying I'm going to buy. It's pre-programmed.
Right.
And then,
Dave, if there's investors that are watching, how do they access your platform?
RedChip.com. RedChip.com. 4,000 small cap stocks.
Yep.
You can access any information on those companies, anything in their filings, press releases, it's all there.
Research
by sectors, with the multiple filters. And again, you can type or verbalize a question. RedChat will give you you want to know enterprise value for Venu. You want to know your last earnings report. You want to know the management. Answers in seconds. So redchip.com.
That's awesome.
Thank you.
That's awesome. Okay, Dave, as we wrap this up, if I'm an investor and I'm watching us today and I'm thinking to myself, what is the best way I can go about doing my homework, my due diligence on a new name that I'm interested in?
Great question. First, again, you've got to we look at when we decide to take on a client, it goes back to what I said earlier. We look at four things. Who's running the company? What's their background? What's their history? Who's on the board of directors?
That's good.
Very importantly, what's their cash position? How have they been financed? Who has financed them, right? In terms of their business model, are their margins as good or better than what we see in the industry, right? So those are four things that we always look at when we take, and how big is that market opportunity? How different is that product? What are the differentiators? And for that, you do have to ask a lot of questions. You typically have to pour through the filings to really see the full picture.
Do your homework.
But with RedChat, of course, you can get answers in seconds.
That's exactly right. That's awesome. That's awesome. Dave, thanks a million for being here.
Okay.
Thank you all for joining in today. As you know, we're roaring around Venu, and we're excited about all that we're doing. And pick up the phone and call us anytime.
Venu!
Exactly right, Venu.